you guys, I want to welcome you back to my channel. If this is your very first time on our channel, go ahead and hit that like and subscribe button. Go ahead and hit the notification buttons as well. That way you guys can be notified whenever we have new videos like this. One of the things that we're going to talk about today is risk management, which is the most important thing pretty much when it comes to trading. If you can't manage your risk, you will never ever last within this game of Forex. All right, so let's go ahead and jump into it. All right, you guys, welcome back. So the first thing that we're going to talk about are lot sizes. So pretty much lot sizes are the core component when it comes to risk management, because lot sizes let you know exactly how much you are risking per trade. Now, one of the things that I want to kind of talk about or kind of discuss is, you know, I get some questions that say, well, you know, if I only have $100, you know, to invest, you know, how much can I make with that? So basically, I don't want you guys to think of it in terms of US stock or crypto, because for example, if you think about US stock, something like Netflix or Apple or something like that, you know, you can invest $100 or $200 within that in hopes that that particular stock will go up and down, which is the same holds true with crypto. You can say, okay, with Bitcoin, I only got $100 to invest in Bitcoin. Let me buy $100 worth and let it kind of go up and down. Well, with Forex, basically how it works is, if you have $100 that you want to invest, you find a broker that you want. That broker can be a Forex.com, a Wanda, Hugo's Way, whatever broker that you so choose to use. You find that broker, you sign up for free, and then you fund that broker. You fund that broker with that $100. And so that broker, in essence, is like your bank account. That money is going to sit there. It's not going to go anywhere. It's going to sit right there in that broker until you decide to actually trade it against a pair. So basically, with that broker, it connects to an app. That app can be a MetaTrader 4 or a MetaTrader 5 or something like that. And basically, your broker will give you a username and a password. And when you go to that app, you log in with that username and password from that broker. And from there, it'll show your balance, which is that $100. Now, with that $100, you can start to take trades. Now, when you take these trades and we're looking at lot sizes, it depends on the broker that you're with, because the lot sizes can translate in two different ways. Depending on some brokers, they might translate in units, but most traders understand lot sizes from volumes. So for example, when someone says, hey, I'm gonna take a standard lot, a lot of us understand and know that a standard lot is a 1.00 in which you're taking, and a standard lot is considered as $10 per pip. And I'll kind of show you guys on the charts how that kind of looks and translate as well. Then you have mini lots. You know, these translate as a 0.10. In some other brokers, this might you might translate this as 10,000 units. But a 0.10 is equivalent to $1 per pip. You have your micro lot, 1,000 units, a 0.01, which is 10 cents per pip, and you have your nano lot, which is 100 units, 0.01, or which is 1 cent per pip. Now, I want to kind of break this down in an example for you guys. So let's just say you decided to take a trade, and you decided to use a standard lot. Now, one of the things I want you to understand, let's just say with that trade, you decided that your stop loss was only 10 pips, and your TP, you were shooting for 50 pips. So if this particular trade goes, you know, in the other direction and doesn't go in your favor, and you hit your stop loss, you just lost $100, because a standard lot, like we said, is $10 per pip. So if this thing goes down 10 pips, you lose $100. Now, if it hits your TP, of course, you've hit $500. Now, if you're looking at this example, this is a 1 to 5 risk reward. You're risking 1 to 5. Okay. All right. And another example, if you did a mini lot, which is a 0.01, which is $1 per pip, same holds true. If it did not go in your favor, you lose $10. But if it did, you would net $50. All right. Let's kind of look at the charts right quick and kind of see how that looks or plays out. Let's just say you decided to take a trade right here. And let's just say we were looking at 50 pips for TP. I know this says 500, but on TradingView, it translate, you pretty much just take off the last zero or whatever. So if we were looking at 10 pips, I would do 100 here. Okay. So let's just say this is our 1 to 5 risk reward. If I hover over this, you will notice right here it says a 5. That's your risk to reward ratio, which lets you know this is a 1 to 5. So let's just say this is 50 pips. Anything in the green is 50. Anything in the black or gray, this is your stop loss area. This is 10 pips. So this is what you're risking. This is what you're trying to make. So basically you want price to get up to your TP here. Now, when we kind of measure this, you can see that we have numbers over here. Let's just say if I take this measuring tool and I start right here from the entry. This is your entry between the green and the black. And let's just say I drag this up. As you can see right here, this little bitty measuring deal, right now I'm at 1.4 pips. As I go up, that's 2 pips, that's 3 pips, that's 4 pips. So you can actually see the units of measure in a pip and how far that is when it comes to price. So this right here, that's 10 pips right there. A lot of traders, they only shoot for 10 pips. You know what I'm saying? But in this instance, coming up here, that's about 50 pips right there. So I just wanted you guys to understand and kind of see how that looks on the charts with regards to pips. Okay. So now, when you're thinking about risk management, I recommend that you only risk 1 to 3% of your account. A lot of traders, they negate this, all the time. They don't necessarily look to take proper risk management, but 3% is still kind of pushing it a little bit, but that's a comfortable area to be in, 1 to 3%. So if you kind of look at this, I recommend that, let's just say if you were doing this from a 1% perspective, that would be a 0.01 per $100 that you have in your account. So you say, what is that? So basically 0.01 would mean, which means 10 cents per pip. And I know you guys probably say, well, that's not really a lie, things like that. Yes, but we're trying to teach you guys not to blow your account. We're trying to teach you guys to sustain your account and have proper risk management. So with something like this, let's just say if you took a standard lot trade, if you took a micro lot trade on something like this and you did 10 pips, if you lost this trade, you'd only lose $1. Okay, so that's what I mean when I say 1% per your account. In this example, if you were risking 2%, then you would do a 0.02 per $100. For $1,000, you do a 0.2. For $10,000, you do 2 standard lots. Same holds true over here if you were doing 1%. And then if you were doing 3%, you just kind of change these numbers as well. Okay. Now, an example, 1%, let's just say if you had $500 and you were risking 1%, then the lot size recommended that you would take would be a 0.05. If you were doing 2% on this $500, then the recommended lot size would be a 0.10. If you're doing 3%, it'll be a 0.15. Okay, I hope that makes sense as far as lot sizes and things like that. All right. Now, there's also a risk to reward formula when it comes to plotting out your lot sizes. Let's just say if you had $2,500, you can use this formula to say my account balance divided by 100, that gives me my lot size, which you can actually see here. It translates to 0.25 lot size. That's if you were doing a 1% type risk reward and things like that. Okay. So like we said, only risk 1 to 3% of your account. And when you want to kind of figure that out, you say your balance minus that percent, and that equals the amount you are willing to lose on each trade. Now, one other thing that I want you guys to understand, which is extremely important, there are a lot of traders who do not trade with stop losses. I'm telling you guys, that's reckless. That is extremely reckless because you never know what time of the market it can be. There can be news confluences that happen, and when news hit the market, depending on what time or whatever pair that you're trading, news can spike a pair up 100 pips in seconds, just like that, or down. So let's just say if you're not let's just say you don't have a stop loss on and you're not managing this thing well, and news hit and you're in that trade, you're only expecting, hey, if this thing goes down 10 pips, I'll just get out of it. But if news hit, this thing can shoot down 100 pips, blow your account in seconds, and you're done. So you always want to, use proper risk management and use stop losses, okay? So another helpful resource that you guys can use is this here, babypips.com/tools position size calculator. So if you guys look at this, if you come to this site, let's just say your account balance was $562 or whatever, and you wanted to risk 2%. Okay, you can say on this particular trade, my stop loss needs to be 25 pips, and I'm trading Euro USD. If you click calculate, basically what it'll do, it'll let you know this is the lot size you need to take. Standard lots and things like that. A 0.045. This is how much you had. If you were risking 2%, and if you lost, you would only lose $11.20. So it tells you, exactly how to actually take those particular lot sizes and what to risk on that particular trade. Okay, and if you click here, it has the different pairs that you can actually go through to actually do that risk management according to whatever pair that you're trading. All right. Last but not least, we're going to talk about risk to reward. So as for me, I only take 1 to 3s. Anything a 1 to 3 or better, that's what I take. For me, I don't necessarily take a 1 to 1. Now that may deviate depending on if you're doing some sort of challenge or something like that, where you're saying I'm only shooting for 10 pips, I'm risking 10 pips or whatever, something like that. It just depends on what do you want to do. But for me, when I'm trading on my own and things like that, I don't do anything less than a 1 to 3. So on here, you can kind of see, for a risk to reward ratio for 1 to 2, if you were risking $100, you're trying to shoot for 200. So like I said, me, I do 1 to 3s and up. You're risking $100, but you're shooting for 300. And the same holds true for a 1 to 4 and a 1 to 5 as well. Hey, you guys. So one of the things I want you guys to just be mindful of when dealing with risk management is the most important thing when it comes to trading. If you're not managing your risk, you will blow your account extremely fast. And a lot of traders, beginners and advanced traders, they do it all the time. They blow their accounts, and it can be frustrating, it can be discouraging. And a lot of traders, once you blow your account a couple of times, you just want to hang it up because you feel like, hey, it don't work, I'm not getting this, and things like that. So you want to basically manage your risk. You also do not want to use money that is a necessity to your home or your needs or your everyday living. Forex, it's risky, you know what I'm saying? And so basically you want to make sure whatever it is that you're risking, it's not coming out of a necessity, a necessity for your lifestyle or your way of living. Never trade anything that you can't afford to lose. Like I said, it's a risky thing. One thing also, and last but not least, whenever you're going into a trade, always think about your stop loss first. We never think about the money that we could potentially make, because if it goes in our favor, then that's a given sometimes. But you always want to think about stop loss first, because that'll get in your mind, okay, this is what I can possibly lose on this particular trade. Hey, you guys, I want to thank you for rocking with me. I hope this video was informative, and I see y'all on the next video.